day number 3 and day number 4 summary. I'm going to bring you up to speed with the trades I've been doing and what the outcomes. Also, I'm going to introduce you to a new concept that I've been using for those trades. So just stay tuned for the video and make sure if you haven't subscribe and let me know what are your thoughts. So let's get to the topic. So right now I'm gonna share my screen and just bring you up to speed. So as I've been telling you, it's important to have a plan and just stick to it. So for the day number 2, for the day number 3 and day number 5, right? This is the plan I've been following. It's pretty much the same. The beginning is the same. So I've checked the news of the SPY at 8:30. So I'm looking especially for news that could make the market move in one or the other direction. So either up or down, negative or positive news, and see if how much impact it can have. Then I analyze the market volume. Basically the order flow. Is it buying or selling orders? And then I use the 10-day moving average to see, based on the 10 previous days, in which direction the current price is moving. Is it moving up or down, or is it following the moving average, right? And then the most important, terms of this video is I'm going to introduce you to the Greeks. Extremely important. Why? Because the Greeks can help you assess your profit. They can help you it could give you a measurement of the risk, depending on whether or not the price will go up or down. It can tell you all those information and much more. And then I'm gonna tell you and show you that I've been selling my contracts or I've been buying, and then I'm gonna tell you whether I've been making any money, I've been losing any money. So transparency. So then I will keep checking the news for potential other entries. So I just wanted to bring back, because I'm introducing you to the Greeks, so I'm gonna tell you just a quick flashback what an option is. So an option is the right but not the obligation to buy or sell a stock on or before a set date. So you can think about an option as an insurance. So let's, for example, take the example of a car, right? So for a car, you buy your insurance in case you have an accident, So you see, as you can see, right, the option is similar to a car insurance because it helps you, prepare for the unexpected in case things doesn't go as you expected. That's pretty much the exact same thing. So also you can think about the option as a bailout. If you hold a stock in case it doesn't go as you expected, whether or not you didn't expect the price to go up or whether or not you didn't expect the price to go down. So let's get to the topic to the Greeks. To see the current view I have, so I'm using Robinhood on my desktop. You just have to click on the SPY stock and you click as indicated by the red arrow below. You click on trade options and you after clicking on buy and call, you select any option, you click buy and call, and you should be able to see the screen I'm seeing right now. So if you look at the bottom right, you will see the Greeks. There are 5 types of Greeks at least shown over here, but we are just gonna focus on the Greeks that I found the most relevant for this video. So those are Delta, Gamma, and Theta. So what is Delta? Delta represents how much the price of a premium will increase. How much the price of a premium if the price of the stock increase or decrease by $1, right? So let's take an example, right? So if you take an example of the 410 SPY call, let's assume that the option premium is $6 and with a delta of 0.6 and the current price of the SPY being $411. So let's assume that the price in this case increased from 411 to 412, so by $1 in sum. So then you can calculate the option premium price after that increase of $1 simply by adding the current price plus delta. So that will give us 6.6. So also the goal of Theta is to give you like a general view of your potential profit. So you can use Delta to calculate your potential profit if the price of that the price of that stock increased by $1, so it's simply delta, because we have a contract representing 100 shares, so the potential profit is 0.6 times 100, which is $60. So you clearly see that delta is being used in many ways. First to measure the profit or the potential loss, depending on type of option that you're trading. And delta also have some other implication, so that could give you the probability of the option or the premium being ending in the money, and also some other technical aspect to it. I'm not gonna get into those. I just want you to, I'm just gonna begin as a beginner. I'm not gonna get into those details for now. So the next one is gamma, right? Gamma represent how much delta will change if the price of the option increase, for example, by $1. So let's go to an example, right? So let's say, let's take our previous example more precisely. So let's say that the price of an option is $6 and delta is 0.6 with a current price of 411. Let's pretend that gamma is 0.02, and let's assume that the price has increased, the price of the SPY has increased from 411 to 412. The next delta is simply 0.6 plus gamma. So you can have, for example, the next delta in this case will be 0.62 more precisely. So basically you see that gamma help you calculate the next delta. So it's basically the rate of change of delta as the price of the option increase or decrease more generally, and that you can translate that in terms of profit and etc. and also based on the previous thing I've been saying about delta. So it's like a chain. So the last term for this video is theta. Theta represents how much value the price of the option will decrease for each passing day as we get closer to the expiration date. As we have been seeing, each option has an expiration date, and as we get closer to the expiration date, our option lose values. So that gives you, if you want to keep that option for a certain amount of time, you can simply calculate how much the option will decrease over time by simply calculating the number of days you keep the option times theta. So also theta works against buyer but for sellers. So let's get into the 3 trades I've been making, right? So I've been making two trades on the same day, so I used 2 day trades for those dates. So on April 19, I bought 2 contracts. Just you can see that on my left side of my screen, and at an average cost of $558, right? You can see the expiration date is May 12th, and you can see the potential return I made that day. So it was $237 for that specific contracts. And then after selling those, I saw another opportunity and jumped into it. So I made another trade that day, but this time at a lower cost. As you can see, the average cost for those 2 contracts is $550. Exact same contract, but just lower average cost, and the total return was $136. So then the last trade I made, I bought basically the same 2 contracts, but at the higher cost the next day, and I made about $60. So let's, as I told you about day trades, let's use those day trades to my advantage. So the question is, you may ask, how did I do it, right? So on Robinhood, you have technically 3 day trades you can make, and you can check how many day trades you have available simply by going, you can find that, by clicking. I don't have the exact, details, but you can put it's not complicated to find it. Assuming that you can find it, right, you will see, as I'm illustrating on my screen below, for example, you can see I've been making 2 out of 3 day trades, right? The maximum being 3. You can see the 4th one is it's locked, right? And you must enable that day trade protection on your account to prevent you to go into troubles. With that protection being enabled, you will not be able to make 4-day trade within a 5 business day period. That's also something I want you to remember for this video: day trades and the Greeks. So my total profit on April 20 was simply adding to the three total returns you have been seeing on my previous screen. So it's gonna be $433 US. So recap for the number 3 and the number 4 of the channel trend. So similarly, I've been I've been reading the news in the morning, looking at the market volume data, checking the daily moving average, make entries, and sort my contract position for a profit, and check the news for for potential entries. That day, I'm gonna bring you up to speed on which entry I've been making. Just take and stay tuned for this journey, and make sure that you subscribe if you haven't. And I will, if you want me to, I'm gonna give you more details about how I'm selecting those time or moment in which I make entries. But again, I don't want to overwhelm you with what I feel might be relevant information. So just stay tuned for this journey, and I'm gonna try to my best to keep you up to speed and how I do those entries over time. Thank you guys for watching. Stay tuned for the next video of my journey. Comment on what you want me to post, and thank you for watching.